This is going to be the only crypto trading video you will ever need, because I've made over $5 million in this market starting from just $2,000 using one repeatable system from cycle to cycle. And in this video, I'm going to show you exactly how to use it. We're going to cover how to pick the best performing coins, when to enter, how to size your trades, and when to take profit with real trade breakdowns. Let's get into it. And we do this by focusing on what 98% of people who lose money in the crypto markets do, and then do the complete opposite. And then by default, we become part of the top 2% that makes money in the space. And we do this by focusing on execution over our emotions. Because what many people do in the markets is that they focus on their emotions, on their wants and their needs, rather than what the actual market is telling them without a proper plan in place. And risk is not something to avoid, because people also see the word risk and get worried. It's something to manage, because when you see your best crypto trading setup and you take it, that is when you make money. Or if you don't have a plan, or you take the wrong kind of setups and you use the wrong kind of risk, and then therefore you will not make money. In fact, you will lose money. And using this system, you do not need to trade every single day to make real money. And that's the real powerful thing about this system. You don't need to trade every day. You can take one trade a week. You can take one trade a month. It depends on you and your own personal wants and needs. So I've said all of this. So what trades do we take? And that all depends on the market conditions and which market conditions we are in, because there are many market conditions. We have bull markets and we have bear markets. And I'm going to cover which strategies work and when. How to tell when the market is about to flip from a bull market to a bear market and a bear market to a bull market, and why most people get trapped during the choppy periods. As you can see here, it is really quite clear which market condition we are in these moments. As you can see, this red moment here, we're in a clear bear market, and in this moment here, we're in a clear bull market. It pretty much goes up only. And same again here, we went down and then we go back up. That's still a bull market in this moment here. And very clearly here, we head into a bear market. And the same again here, is very clear that this is a bull market. We make higher highs and higher lows. And these are the strategies that you need to apply in both of them. In a bull market, you look to buy dips and then sell rips. It's that simple. So as you can see here, the market is in a bull market. We're making higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, higher low. And what we aim to do is that we aim to buy in these areas here all the way up and sell in these areas here, so we can look to rebuy this area here before this moment here. Then what happens is the market turns, goes sideways, and we start to chop. Then we head into a bear market where we make lower highs and lower lows like this. And what we aim to do here is we look to sell these rips here. What I mean by a rip is where price rips up, and then we take profit on dips if you're shorting, or you can just stay patient if you do not want to short the market in a bear market. And now these cycles happen all of the time. As you can see here, this is a typical market cycle. If you've been in crypto for a while now, you are guaranteed to see this cycle somewhere along the line, where we go disbelief, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation. Now this market cycle happens time and time again in many different forms. However, if we break it down in the most simplistic form, this is what we get. This is the accumulation period where price goes sideways after a downtrend. Then we have a bull market where price comes and we make higher highs and higher lows. As I just mentioned, in a bull market, we aim to buy every single low that we see into a support area, and I'm going to cover that shortly in the exact trading setup. Then sometimes we get reaccumulation where we go back into a sideways momentum. Then we pump again, and price accelerates here for another final pump. What happens now is we go into distribution. Now this is where most people get trapped, because they think this is reaccumulation again before price goes higher. And this isn't true. This is not the case. What happens here is that price breaks down from this region. As you can see, we break down, retest of the support level, break down, retest, and then we start to sell off. Then we head into distribution and redistribution from a downtrend here. Most market participants now think this is a buy the dip opportunity, because buying the dip has worked for them and made them a lot of money in the past. But market conditions never stay the same, because if it stayed the same, it would be easy for everyone just to do the same thing week in, week out and make a lot of money. The market conditions change to trick you and set traps for you to lose money. And this is why 98% of people lose money in the markets. And then once we redistribute again, the market falls and then the cycle repeats. It goes back into accumulation. You can see this many times on the chart. As you can see, we go into this cycle. Let's go back all the way to 2014-15 for the 2020 cycle. This repeats itself time and time again. As you can see here, this is accumulation. We break out, we then go into the bull market where we make higher highs and higher lows. As you can see, some of these pumps are very extreme, but we still make higher highs and higher lows where we want to buy the dip every single time. Then the market pumps all the way up, making higher highs, higher lows, higher highs, higher lows, all the way up into distribution here. Then what happens is we make distribution, the market tops, then we break down, retest here, then we make lower highs and lower lows. As you can see, the market goes down, it goes up, lower high here, lower low there, lower high there, lower high, lower low, lower high, lower low, all the way into here until we come back into reaccumulation. As you can see, the market does the same thing over and over again, where we go into reaccumulation for a long period of time before we break out, and then we repeat the market cycle into making higher highs and higher lows back into a bull market. So this cycle repeats itself time and time again, and you can mark this out on the charts for yourself to look at. But people get confused on when the market condition is about to flip. So how can we tell when this is going to happen? How can we tell when the market is about to flip and change in market condition, where it's going to go from a bull market to a bear market? And this is actually where most people get trapped during the chop in between these two market conditions during the distribution phase here. The reason being is because this is a weekly chart here, and as you can see, it goes on for 1, 2, 3, 4 weeks at the top here. For some people, it's a long period of time, and we already make a correction here where you can buy the dip to go higher. But as you can see in the bigger picture, this is a consolidation. We're just trading inside this box here before the market breaks down. And this is actually where I called the exact top in the crypto markets in November 2021. I called the top here before we head down before the massive bear market there. And the reason why people get confused is because they are trained to buy the dip here, they're trained to buy the dip here, they're trained to buy the dip here, they're trained to buy the dip here. And then when the dip comes, obviously the saying comes, the dip keeps dipping. And this isn't true. It's because you've been trained for one market condition, but then the market condition changes and tricks most people. And therefore, then what happens is the price heads lower and one strategy doesn't work anymore. So then you need to pivot to the new strategy where you sell the highs and then rebuy back and cover your position at the lows. That is how you need to change and adjust according to the different market conditions. And look, this isn't just crypto. Every single asset in the world goes through these market cycles. It doesn't matter if it's a housing bubble or a housing cycle, house prices still come down. Gold still does the same. I can show you on the chart right now. As you can see here, gold goes through a very long accumulation period here. We go sideways, we make higher highs and higher lows. And then what happens here is we go into a distribution, then the market corrects itself, then the market goes back into a reaccumulation period here, and then it repeats itself time and time again. These market cycles happen everywhere. So it doesn't matter if you're trading houses, gold, crypto, altcoins, and everything else. Everything goes through these cycles because of one thing I mentioned at the start of this video, emotions. People cannot handle their emotions when they are trading. So therefore, if you focus on execution and the charts, while everyone else is focusing on their emotions, which you can see and feel every emotion at every point on this cheat sheet. When people are extremely euphoric, we are expecting a pullback. When people are feeling angry, this is usually the bottom of the market. And before the market cycle goes back into a disbelief rally, and then the market cycle repeats itself again and we come back here. This rally will fail like the others, and then the market cycle happens again. Especially for assets like Bitcoin that are a hedge against inflation. Gold is also a hedge against inflation, which means that the value of the dollar goes down. And so by default, the value of gold, Bitcoin, etc. goes up. And that's why we have these cycles. But in crypto, not all coins will pump at the same time. There is one thing that will cause an asset, an altcoin in crypto to pump. So this comes down to how do we pick the right coins? Because there are so many coins out there now that it is impossible for them all to pump at the same time. And there are certain narratives in crypto, which mean that certain categories pump a lot more than others. Now, what are previous examples so we can predict future examples? This is what has caused the DeFi bubble back in 2020, which is decentralized finance. This was a big idea that the decentralized financial market was going to overtake the banks and the banks would disappear. So that was the big idea. Then in the recent years, 2023, 2024, we saw meme coins. The big idea here was that it was decentralized. There was no big institutions in these coins, that it was a free market for the people and that they would overtake the bigger that were controlled by a small group of people. Then we also had artificial intelligence, and obviously this was as a result of things like Nvidia in the traditional stock market. As you can see here, certain categories pump while the rest of the market stays stagnant. And if you were investing in DeFi in 2024, you probably wouldn't have done so well because this money rotated to coins like meme coins and AI. Because in crypto, money flows to narratives, not just random coins. And narratives are just driven by price. Number one, is price starting to pump? And then once price starts to pump, people then get the belief, as I was talking about earlier. Meme coins are the next best thing because it is made as a decentralized coin for the people. And as long as people just continue to hold meme coins, they will just go up forever. The same thing with DeFi, that DeFi is going to overtake the banks. And then hype comes because people start to see price pumping and then they start to believe in this big idea and this big belief system. Then hype comes because once price starts pumping extremely high, this is when we start to get euphoria. And this is how the overall market cycle plays out, as I was showing you earlier in this video. And this is why not everything pumps in crypto at the same time. Maybe you've held a coin before and everything else is pumping, but your coin hasn't pumped. And that is probably because your coin is not on narrative. And this is the thing. All of the successful narratives have attention. DeFi had attention, meme coins had attention, and AI had attention from the traditional stock market. And these were some of my calls over the recent times. Aave in DeFi, we recently had a 3x on this, which is what I called here in my Telegram in the description below. Rune, back in the day, I made 20x on this. Link, I did a 50x on this back in the day. Also, I've called many billion-dollar meme coins. Popcat, I called this one, and it did many multiples here, over a 5 to 10x before it hit a multi-billion-dollar market cap. The same with Bonk, the same with Mog, the same with Pepe, and the same with Tits. Tits didn't hit a billion-dollar market cap, but it did a 500x from where I called it. As I called it in my Telegram here, I said this could be the next 100x, and I think that it's going to be around to the 100 million to $1 billion market cap area. And then also recently I called FET, which did a 20x. I told everyone to buy in here, which then did a 20x return on your investment. If you put $1,000 in, you'd have $20,000 out of it. And I call all of these in my 7-figure mastermind, which you can find in the description below. And it's all well and good being able to spot the right narrative and understand where you are in the market cycle. But if you do not know how to buy and sell at the right time with the correct amount of risk, then you will still lose money. So we can use these 3 indicators here to time your positioning in the market. So for number 1, we can use the total market cap. What you want to do is go to tradingview.com and type in total, and then this is where you find the total market cap. This is all of the crypto coins added together, and then you get the total amount here. And what you do with this is use the exact market cycle as I mentioned earlier. You can use this to time entries in the market. For example, when price pulls back, it is usually a good idea to buy the dip. For example, I told everyone to buy the dip down here in this region. I also told everyone to continue to buy the dip in this area here, and then again in this area here. Just using this chart alone, you can use it with technical analysis. And very simply, what I mentioned in the beginning of the video, because this chart is making higher highs and higher lows, you want to buy the dip here and then sell the rips up here. You want to buy the dips down here and then sell the rips up here. And then you want to wait for price to pull back into here. And then this is where you want to be looking to buy in the future. Now, that's only one of these indicators that you can use to time your positioning. The second one is Bitcoin dominance. Now, you want to go back to tradingview.com and type in BTC.D. Now, what this chart means is how much of the market cap in crypto is Bitcoin. Let's say the total market cap is, in the previous chart that I just shown you, is $10 trillion. Now, crypto isn't a $10 trillion asset, it's only 3. However, for this moment here, I am using easy numbers. Now, let's say that the entire total market cap is 10 trillion and the market cap of Bitcoin is 5 trillion. That means that this market dominance would be at 50% because 50% of the total crypto market cap is owned by Bitcoin. And then obviously if the market cap of Bitcoin was 2.5 trillion, then that means it would be 25%. Now, how can we use this to time our entries? And what does that mean? If Bitcoin is a higher percentage of the market cap, then that usually means that the market is strong. Because Bitcoin is the number one coin in the entire space, that means that most of the money is in there. Once this number starts to go down, that means that the money flows into the altcoins. And this is when you get an alt season. This is when many altcoins in a certain narrative start to pump. Now, what this means is that the money has flown from a strong asset such as Bitcoin into weaker assets. And then what that means is that the market is usually going to top. As you can see here, this is November 2021. Anytime that the Bitcoin dominance gets down into this lower region here, it usually means that the market cycle is about to end. And as you can see, exactly the same here. In 2017, the Bitcoin dominance hit all-time lows, and therefore we hit a bear market. So the longer this stays strong and Bitcoin dominance continues to pump, it means that the bull market is usually going to sustain because all of the money is going into the stronger assets such as Bitcoin. Then the third and final indicator here is volume. Now, many people think that you must add the indicator by going into indicators here, typing in volume, and then adding in the volume indicator, which is this one here. I have it favorited, just volume by TradingView. But you can put this on there, and I will go to the Bitcoin chart to clearly illustrate the volume. So let's go to Bitcoin crypto. Now, you can add the volume in the charts. However, you can always tell the volume of the charts by the size of the candles. And the reason being is because in order for a large candle to be created, there needs to be a lot of volume. As you can see here, this red day or red week is a large volume day. And usually you'll see large volumes spikes when there are large sell-offs. As you can see here, this was a large volume day here, and this was also a large volume day. And you can use these large volume days to time a bottom in the markets. And sometimes when we rally like this, you'll see a drop off in volume, but you can kind of see it. As you can see here, there is a small drop off in volume, but you can also see it in the candlesticks. We've had 1, 2, 3 large green weekly candles, or white in my case, because that is the way I've colored my chart. But then you see 1, 2, 3 here, smaller candles. That means there is less volume in this area, which means we are pumping on low volume, which therefore means that the market is going to break down eventually. And the reason this is because there isn't enough money coming in. There isn't enough buy pressure to counteract the sell pressure in this moment here, which is what led to a large bear market. Now, volume mainly helps in picking a bottom, as I just mentioned. So as you can see here, this is a larger red candle in relative to the other ones around it. It's all relative to what is the most recent price action. You can't compare the volume on this day here to current price action. You have to compare the volume in this area here. So as you can see, these 2 weeks here are the large volume days in this area here on the weekly time frame. Now, sometimes the volume doesn't get reported back from the exchange correctly to TradingView, so it is not 100% accurate, but it is something that you can look at. I like to look at just the size of the candles themselves if there is a large correction. Now, this large correction leads to my next point, which I'm about to make, because so far we've gone over what part of the market cycle you should buy in a bull market and sell in a bear market, which coins you should buy, how to pick a narrative, and how to spot future narratives depending on what people believe at that certain time, and then how to time your buys using the total market cap on pullbacks, and how to time your buys with altcoins using Bitcoin dominance and volume in a bull market. Now we're going to cover how to enter the markets with the best risk management and your position sizing. And really, in a bull market, this is all I focus on. So this is a bull market strategy, which we are currently in. And this is where I'm producing results consistently with this exact trading setup. So step number one, all we need to do is wait for price to pull back. That is it. You need to stay patient and wait for price to pull back. This is usually 30%, 50%, and sometimes 80%, depending on the trade setup. And then step number two, we enter at clean support levels, because price has fallen 30 to 80%. It depends on the chart. Sometimes on a chart like Bitcoin, it will only fall 30%, whereas an altcoin, which has less market cap and less traders in it, it will fall further, such as 50 to 80%. So it depends on the coin that you are trading. Now, what we want to do here is enter at this clean support level. And sometimes price pushes under at first, which is absolutely fine because it gives us a clean invalidation. I have a strategy on entering the markets this way. When price pushes under our support level and then gets back above, this is where I enter the markets here with a clean stop loss below the low here before we head higher. And if we don't get this push below, all we do is use step number three. If price just breaks through this area here and doesn't hold it and continues lower, we just cut on a clean break below the support level, keeping our trades very, very simple, because we do not want to overcomplicate the trades, because the candles are complicated themselves. So we keep everything super, super simple. And let's look at some of the examples that have made me hundreds of thousands of dollars recently. And this is a chart setup on Aave. As you can see here, I was expecting a 2x return on this. The reason being is because we had a large consolidation here. We broke out, we spent time and distance away from this range. We then come back down to retest this as a support level. Let me go to the chart. So as you can see here, this is my setup number one. We have a resistance area here, resistance, resistance, resistance. Part of the crypto cycle narrative. We were consolidating in this area here, accumulating. We then broke out and we spent time and distance away from this level. And then we pull back 70% into a key support level. As you can see, this was previously resistance turning into support. Therefore, I was expecting a bounce on this coin, and therefore I was buying in this area, in this green box in here on Aave, which led to a 181% return on your investment. And the simple thing is, you just buy in this box here and you cut on a clean break below, which gives us very good risk to reward on the trades that we take. And that is simply how I was able to make a 2 to 3x on Aave. The same recently on ETH. This was a higher time frame trade, and all I said here was that this was the higher time frame on ETH, and the market wants to pull back a little bit deeper, and that this is where you want to be looking to buy. And I wanted to do my buys in this box here, and if this box didn't hold, we cut our trades and then we move on. But let me show you the chart on how this played out. And as you can see here, this is the Ethereum chart right here, and this is one of the largest moves in Ethereum since 2021. We had one pump in 2023, 24, and then this was the second one in 2025. So we caught the largest move on Ethereum in most recent years. And how did I do this? Well, as you can see here, price had fallen 66% on the second largest coin. I was doing some buying down here, but this in this box here was my main position. And the reason being is because we'd spent 66% down. We had a small bounce. Then what had happened is that this was the first pullback of this rally. And I wanted to buy this dip according to the higher highs and higher lows. And also we had reclaimed back above this support level here. As you can see, this was support. This was support. We spent time and distance away. Support here, support here, support here on this wick right here. Then we'd broken down. Sometimes it pushes under the level first, but then once it gets back above the level, this is where we were doing our buying on Ethereum at $2,200 before price went all the way up to 4,700 and gave us a 2x return on our money. So whatever we put in, we got double back. And these were some of the results that were created during these trades. Princess Girl here made $9,500 in a single week through her trading. And so if you would like to produce results like this and hit 7 figures this bull run, then you need to join my 7-figure mastermind, which is in the description below. And these are many of the results that I have created inside. I've created 5 verified crypto millionaires and many more 6-figure earners, which you can see on the screen right here, right now. Princess Girl, when she first joined, she was just a doctor on a normal wage. And through my trades, she has now hit a balance of $1 million and she's very grateful. The same with Mrs. Chips here. She has realized her dream of hitting a 7-figure goal using my guidance and expertise. And the same with AN1 Trading. She was able to build herself a brand new driveway, render a house, the walls and the grates, gates, and a holiday in there too. So if you would like to produce results like this yourself, then you need to join my 7-figure mastermind, which you can find in the description below, and join many other students producing 7-figure results like this. So that's all for this video. I will see you all in the next one.